So then why do the averages get back their gains? Once we heard the chatter about the tariffs staying on until after the election, the media settled on a narrative, the mainstream media settled on a narrative that there's no path forward for a phase 2 trade deal on top of the deal we've already just negotiated. Now, listen to me. Also, they felt that coupled with the fact that the market had gotten overbought, that's what I think caused the averages to roll over. But you know what? What's important here? I think that worrying about the path forward is like worrying about the next game when your team has just won the darn Super Bowl. The timeline here is not what's important. Don't buy into that. What matters is that President Trump won't roll back the tariffs until China follows through with its promise to buy $200 billion worth of stuff for us. To me, it sounds like, I don't know, it sounds like Reagan, trust and verify with the Russians. Away from trade, we got our first big earnings reports from Delta Airlines, Citigroup, JP Morgan, Wells Fargo. 3 out of 4 were astonishing. Delta reported a magnificent quarter, bolstered by robust U.S. travel that was far better than we expected. Sure, the company benefited from the fact that all those grounded 737 MAX planes have curbed airline capacity, allowing them to raise prices. But after those numbers, the stock was simply too cheap for words, trading just 8 times next year's earnings estimates. Delta CEO Ed Bastian called it a terrific holiday season when he was interviewed by our own Phil LeBeau. Then JP Morgan and Citigroup gave you monster good quarters. JP Morgan posted 7% deposit growth, 3% loan growth, still had strong net interest income despite the decline in the Fed funds rate. That wasn't supposed to happen either. I don't know how this is. A plethora of good news. Hey, by the way, speaking of China, I think the newfound certainty that came with the deal and the trade truce, led to a spike in trading. People stopped sitting on their hands, which helped JP Morgan deliver this giant upside surprise. If anything, Citigroup's results were even more impressive when you consider that this is actually the cheapest of the major bank stocks. Citi had excellent growth in all lines, especially credit cards, up double digits. Companies also voracious about buying back its stock. They've now retired roughly a third of their share count over the last few years. Fly in the ointment? Wells Fargo. One look at their pathetic results makes it clear this company's suffering. It's not spending enough, perhaps because of the management turmoil. JP Morgan's been able to take market share left and right in this country because it's invested heavily in technology and service. Wells Fargo is lagging behind in taking new accounts, and that's another reason why its stock got hammered. They got to spend a lot. They got to get their act together. Charlie Scharf, new CEO, he's got his hands filled. Now, even though we got a lot of good news, the market couldn't sustain this morning's rally. Again, stocks were overbought, meaning we've come up very far, very fast. But the statistics from these banks show a robust consumer who's still spending within her means. That's an encouraging backdrop, especially if we're headed into some short-term sell-off after a remarkable run. One last positive, the endless rally of the overheated FAANG stocks, on the same old price target bump, price target bump, price target bump news finally seems to have run its course. I say hallelujah. It's good. These stocks need to cool down. Meanwhile, the banks and the airlines have been stalled for a while, and that's how they were able to run on positive stories. Bottom line, if today's afternoon pullback turns into a full-blown decline later this week, you need to remember that a sell-off would be a terrible thing to waste. So many companies doing so well. I'd love to buy them, but at this point, only on weakness.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.